The other thing I wanted you to talk about was the asset depletion, right?
Okay.
I think a ton of loan officers miss this. I know when Jenny first came on, she was doing asset depletion left and right.
Yeah.
And those factors matter. So, and bottom line is if you have money in the bank, but you're not showing a lot of monthly income, asset depletion would help you qualify. And then, Peg, can you talk a little bit about asset depletion calculations, what that
Yep.
looks like? Yep.
There are actually two different kinds of asset programs. One where you're looking at all of the monthly debt that the borrower has, and you're just saying, okay, well, here's what he's got. Here's what he's going to put down on this house. Here are the closing costs and reserves, and here's all his monthly debt. We're going to times it times 60 or 80 months, depends on the investor. And if he has anything left after you do all that, you're good. The other program is where you're converting those assets into an actual income amount. You're basically doing the same calculation as the first one, except you're not looking at all of his debt. You're just looking at you're deducting the amount of the loan, the prepaid closing cost, the reserves, and then you're taking what's left and dividing it by 120 months usually to get a monthly income, and then you plug that income into your loan like you would any other income to see if you qualify. So there are two different programs. Now each investor will do their calculations a little different as far as how much of those assets it will count. So anything, but most of the average is anything in any kind of checking, savings, money market account, you can count 100% of those assets. If it's stocks, bonds, CDs, things like that, it's 80%. And then retirement funds are typically 70%. Might get a little bit higher if they're retirement age, but typically it's 70%. So then there's a worksheet for it. You just calculated all that based on those percentages to get your eligible assets. And then you either, I always recommend to the loan officers to apply both. Um, do it the income way or the total debt way. And then you just figure out whether or not he's got enough assets. There usually is a minimum amount. Um, and I think it's usually 500,000 that he must have. And some people make the mistake is they forget to deduct down payment on the house that they're purchasing before they do their calculations. So make sure that you're deducting the cost of the down payment plus the closing costs and so forth before you to get your eligible assets. It can
Yep.
get a little
Yeah.
complicated, so but it's really not. It's just a basic worksheet that calculates whether you either convert the assets into income or you don't. And you just, as long as you have money left over, you have enough assets to pay for those loan payments for a certain amount of years.
And
No,
they
that's
and they
good.
don't have to draw. They don't have to set up like a draw
No,
that they start getting
no,
on their assets,
no.
A lot
And
of
you don't
people
have
are
to
skittish when it comes to that.
yeah, you don't have to liquidate anything. You can keep it wherever it is because it's only going to use the percentage that it decides you can use. So it's just a really nice option for someone who isn't maybe just got
Doesn't
lots of
have to
money.
be a
They
retirement. Do they have to be a retirement age? Because I know like on
no,
Fannie and Freddie, one does require 62 and one doesn't.
no, you don't.
Age
It just,
restriction.
but it might affect the percentage that's given to the asset, whether the retirement age or not. So
And
if
is
the
it,
retirement age, they might be able to use a higher percentage of those assets.
do they allow all kinds of assets? Because I know like on Fannie, they only allow you to use like Roth, IRA, retirement, things like that.
Um, I've not found that there. I do have a couple lenders who don't like cryptocurrency.
Okay.
Although that's changing a little bit as we go further into that world. But um, typically they will allow it. They just may apply a lower percentage as to get the eligible assets to be used in the calculation. But um,
No, that's good.
it's
Good to know.
Yeah,
Yeah, I mean,
and
the main thing to know is like if your client has money in the bank, they're not out. Like if they say they don't have income, it's okay. Like again, like just send them over, let us work through it.
Yeah, and
And
we
then
can do
Peg,
it
the
as a
last,
standard file too. I mean, it doesn't have to go
yeah,
non-QM. We can go with Fannie or Freddie. They do have an option there. So I mean, it's pretty great pricing. And it's just kind of an alternative solution to
yep,
no income.
yeah.
helping them get
We
their
also have,
goal.
I haven't talked about this yet. We have land loans. So we have investors that will do that. We have an investor who will do hobby farms. Like I get a lot of requests for people that have these, 40-acre, 100-acre properties, and they have trouble finding
Yeah,
solutions for them. And
Hey,
I
tell them
I have
about,
options for them.
Melanie,
hey,
do you have a hobby farm right now that you're working on?
yes, someone on this call also knows about this hobby farm. This is a self-employed, we use 1099s, non-owner occupied hobby farm.